Days like this are tough, not just because valuations are coming down, losses are made, but because everything is coming down at the same time. It seems like it doesn't even matter what altcoin we pick. It doesn't matter that we did these hours and hours of research trying to find the perfect technology or the perfect team. It doesn't matter. There is this invisible hand that's selling everything at the same time. And so really, it seems like the micro decision isn't that important. What kind of asset in crypto should be bought doesn't seem to be as important. What seems to be more important is actually, where is the capital going? What's the capital rotation like? Is it going to the stablecoins? Is it going to Bitcoin, to Ethereum, maybe to Solana? Those major shifts seem to be more important than the micro decisions, what altcoin to pick. And so let's have a look at the major shifts in this video. What we see over here is the Bitcoin dominance. How much of all of crypto is in BTC? And in the last 8 years, roughly, we traded in a range somewhere between 73 and 38%. So this shows how much of all of crypto in terms of market cap is currently Bitcoin. When this is high, then the altcoins are cheap, then Ethereum is cheap, etc. When this is low, then the altcoins are expensive. So whenever we see a crash like this, that's when altcoin season happens. Now, for the last 3 years, we have seen Bitcoin dominance go up, and we saw 2 corrections within that time. We saw a correction here. This is when Solana outperformed, when the pump.fun ecosystem took off and all the meme coins got traded. And then we've got the second correction here. This is when Ethereum outperformed the rest of the market. And the story behind that was the Ethereum treasury companies and the Ethereum ETFs. But if history is any indication, we might now see Bitcoin dominance rebound again. Maybe Bitcoin outperforms again. And maybe we have to go all the way up to 73% for the market to get excited enough again to get into more risk on assets. That's at least my base case. That's how I interpret the data. Here, have a look at the Ethereum dominance. It bounced in the middle of April of this year. This is also when the treasury companies came in. This is when the ETFs started purchasing more. But there is this turnaround point at around 14.5%. It got respected in August of 2020. It got respected in June of 2022. And now again, we've seen a turnaround. And it seems like Ethereum is now having a hard time. Ethereum is getting sold off. And it's really the sell-off of Ethereum that's pushing down most altcoins. Because many altcoins are directly coupled via liquidity pools with the Ethereum price. When the Ethereum price is going down by 10%, then a lot of altcoins automatically also go down by 10%. Because actually the pricing of many altcoins is not happening in US dollars, but it's happening versus Ethereum in the liquidity pool. But more on that in a different video. Let's talk about Ethereum again. This is the Ethereum holdings by public companies. And this shows why the Ethereum dominance is currently coming down, why people are taking profit in ETH. For the last 3 weeks, we haven't seen that many additional purchases anymore. Yes, BitMine, Tom Lee, bought a little bit of Ethereum, but the purchases have definitely slowed down. Have a look at the balance of Ethereum ETF holdings. It's still going up, but again, the rate of purchases is going down. The increase is less steep, and that then leads to people taking profit in ETH. And that's then why many altcoins come down with it. Really, the situation for Bitcoin looks healthier. This is the Bitcoin treasury company balances. And this tends to go up much more consistently. And when we look at the ETF purchases, it's the same thing. It still continues to increase at a very similar rate that started at the beginning of last year. And so the fundamental question is, since first Bitcoin rallied and then subsequently Ethereum rallied, are we now going to see more risk on behavior? So are people going to get into Solana? Are people going to get more into these small altcoins? Or are we going to see a recovery of Bitcoin? So will we get actually more risk off first until we see the real altcoin season? I think that's very, very likely. Again, the chart patterns suggest this, right? When we look at Bitcoin and Ethereum dominance, but also Solana dominance seems to be now going down. And Solana can be seen as more risk on compared to Bitcoin and Ethereum. Here is the SOL dominance. And yes, we have seen a massive drop in Solana in the past. This is when FTX collapsed over here. Then the subsequent recovery that was fueled by meme coin trading, and in the last 1.5 to 2 years, we are trading in a range between 3.8 and 2.3%. And with the current crash, we actually have seen Solana dominance come down. Bitcoin dominance is going up, but Ethereum and Solana dominance is going down. So this is a move towards more risk-off behavior. The same is true for the others dominance. So how much of all of crypto is currently in the altcoins that are not in the top 10. This tended to go up and then turned around at the beginning of 2022. The smaller altcoins have underperformed the rest of crypto by 60%. And have a look at the correlation to the Ethereum dominance. Again, showing the coupling. When the others dominance bottomed, that's also when the Ethereum dominance bottomed. When the others dominance topped, that's also when the Ethereum dominance topped. So there's clearly a connection between the two. And if we now expect that the Ethereum dominance comes further down because the treasury companies don't buy anymore at the same pace as they used to, then very likely the altcoins will come with it. Now I'm only talking about capital rotation here, right? I'm not talking about US dollar prices. I'm just trying to figure out what part of crypto is likely going to do better than other parts within crypto. The crypto space as a whole still is expanding. This is the stablecoin market cap over time. And this here was the Terra Luna collapse. So this is when the UST stablecoin depegged, and that then led to many people withdraw from the crypto ecosystem back into traditional finance. That then turned around at the beginning of October of 2023. So that's now roughly 2 years ago. Since then, the stablecoin market cap is going up again. It has so far expanded by 117%. And of course, as money flows into the space, as people convert from traditional fiat into crypto stablecoins, the market as a whole should, over the long term, go up. But that's the long term, not the short term. This is now the stablecoin dominance. So how much percent of all of crypto is currently in stablecoins? And this tends to trade between 9% and 5%. So when this is very high, then people are risk off. A lot of crypto capital is just in stablecoins. When this is very low, then a lot of people are risk on, and crypto prices are very high. So there's an inverse correlation here between the stablecoin dominance and crypto prices. And there's a chance that the stablecoin dominance will drop from here to then subsequently rise again. If the stablecoin dominance is going down, that means that crypto prices should bounce. They should go up. This here at the bottom is the Bitcoin price. And just have a look at how this is negatively correlated. When the stablecoin dominance is low, Bitcoin is high. When the stablecoin dominance is high, then Bitcoin is low. So we should sell when the dominance is low, we should buy when the dominance is high. And currently we are on our way down, and it doesn't make sense to sell once the stablecoin dominance is close to 5% again. So if we see another bounce again, if we see a short-term rally and a new all-time high for BTC, it might make sense to take some chips off the table. But again, I do believe that Bitcoin dominance is likely going to go up from here. Bitcoin is likely going to outperform the rest of crypto, especially Ethereum. I think the Ethereum hype has died down for now. Wall Street isn't buying at the same pace anymore. And so people are now, I believe justifiably so, selling some of their Ethereum, taking some profit. And that has the unfortunate rollover effect that due to the liquidity pool coupling, many altcoins come down with it. But there's of course a way to make money with that, with relative valuation trades, right? Most altcoins tend to underperform Bitcoin most of the time. This is how I personally make my money in crypto. Now here's something I want you to avoid. Please do not follow people that tell you that there's the next 100x cryptocurrency where you're getting rich quick. Because you might have read about the statistic that 99.6% of pump.fun traders, so traders of smaller meme coins, did not realize a profit over just $10,000. The vast majority of people lose. The winners might be among those influencers, the winners might be among the insiders, and the rest is simply burning their money. And so because of that capital concentration process, because more and more people lose their money, ecosystems like pump.fun tend to shrink when there's no new marketing. And so what's the solution here? Because we want to make money over time, right? What's actually realistic if we can't make our 100x? There is a simple conservative solution. It's just dollar cost averaging. It's buying $1,000, for example, every month into something like Bitcoin. So do this for longer than a cycle, so for more than 4 years, in this example 6 years, then the performance looks like this. So had you dollar cost averaged into the S&P 500 or into gold, you have gotten this performance, but by buying into Bitcoin, you're getting this performance here. Now the time horizon matters here, right? Because there are bear markets. We include here a bear market where Bitcoin went from almost 70K all the way down to 16K. So at that point, the performance of the S&P 500 and gold and Bitcoin were very, very similar. But if the time horizon is long enough, then just within 6 years and just $1,000 per month, a comfortable nest egg of 360K can be built. It's not sexy, it takes longer, it takes effort, it takes contributions. It's not getting rich quick, but it's getting rich consistently. Now, I'm a fan of beating this, of course, because the crypto market is still very inefficient. But it's not inefficient in the way how you might expect. I am dollar cost averaging into my trading portfolio as well. This is my active trading portfolio measured in BTC. And my plan is to get to 8 Bitcoin within the next 2 years. Now, I didn't just buy Bitcoin with my trading portfolio. I actually did do active trading that did outperform buying and holding. I got this alpha here. So had I not dollar cost averaged, if I just paid into the trading portfolio once, I would have roughly doubled the amount within 48 years. So because I didn't just buy into Bitcoin, but I did do active trading, I'm now close to 5 Bitcoin and not just close to 2.5 Bitcoin. So what's more important? Is it the trading? Is it the regular contribution? The answer is both is important. At the beginning, the regular contribution is more important. At the end, generating the alpha is becoming more important, right? Because once this is at 3x, not just at 2x, then 2/3 of the Bitcoin in the portfolio is just due to alpha and is not due to dollar cost averaging. So both is important. Contributing is more important at the beginning. Trying to outtrade everything when the capital base is still small is not the smartest idea. Again, you've got a very high likelihood of losing it all. And so I'm actually doing the exact opposite of what most other people are doing. Most others try to find the next best altcoins. They have maybe a diversified altcoin portfolio, 10, 20 altcoins, and they try to beat Bitcoin that way. But more often than not, this fails. If you listen to people like this, how ApeCoin will be the next 100x investment, this video was published 8 months ago, then you would have underperformed Bitcoin by 44% since then. Now, this is not just in the last 8 months. Have a look at what ApeCoin did prior to that. It just underperformed Bitcoin extremely consistently. And so that's how everybody gets wrecked. That's how the majority of people lose. Most people buy things that get recommended by influencers, and very often those influencers get paid by the different crypto projects to do that marketing. I, by the way, never take any money from any crypto project ever. The only money that I take is from the premium members that support this channel here. But more of that in a second. Here's the reason why ApeCoin did so poorly. The supply increased over time massively, and the early insiders at the team, etc., they get token unlocks over time and they dump those unlocks on the market, which makes sense when your token performs like this relative to Bitcoin. So this as well is a self-fulfilling prophecy. If most people expect a token to do worse than BTC, then the selling pressure will just continue. And so my approach is to just flip this whole thing around. So instead of trying to find the best altcoins and buying them and having a diversified portfolio of altcoins, I'm just betting on falling prices of altcoins relative to Bitcoin. So I go long Bitcoin, I bet on rising prices of Bitcoin, and I go short the altcoins that are extremely poor in long-term performance. So instead of this chart, I've got the performance of this chart here. So there's now Bitcoin relative to ApeCoin. And what we see here in white, that's just the Bitcoin price. As in, Bitcoin does have its drops, but relatively speaking, since ApeCoin is so inflationary, it tends to do so much worse. And so over time, it tends to just very constantly outperform just plain old holding Bitcoin. So there's a better strategy to just buying and holding Bitcoin. There's a better strategy to just dollar cost averaging into Bitcoin. And it's not finding the next 100x altcoin. It's betting on falling altcoins because the insiders are cashing out constantly. That's actually how we can beat the market. And that's what I'm doing for the last 4 years. And so I want to share this strategy, of course. It's not as straightforward as just buying an altcoin. We do need to use decentralized finance applications. We do need to do some risk management here, but long term, again, it's worth it. I have made many tutorial videos on the topic, but in the end, you only need 2 videos, 2 very important videos just just to copy trade what I do. So that's this video over here, using perpetual futures to bet on relative valuations, and this video over here, risk management with relative valuation bets. Those two videos in total amount to roughly 1 hour of content. After you've consumed this content, you can do bets like this. Now, many altcoins are inflationary, and so there's many such opportunities. I also have one favorite trade where the outperformance is very, very constant, where the volatility is very low. I will share that favorite trade once you join. So after you've watched those two videos and you've joined the community, I will share my favorite trade. And if that favorite trade does not make money after 1 month of holding, then I will refund the premium membership fee for you, no questions asked. So it's currently $125 per month, and if you don't make money with that trade in that month, you will just get that money back. So you're not really risking that money, and you can watch all the tutorials in premium, not just the two that were mentioned here. So feel free to explore premium without any risk. A link to the website should appear directly here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.